Asian stocks are sliding today as much as 3% after Swiss lender UBS agreed to buy its banking rival Credit Suisse in a $3.25 billion takeover. The government-backed deal corresponds to a capitalization which is far below the level at which Credit Suisse was trading at on Friday. The Swiss National Bank said the deal was the best way, though, to restore the confidence of financial markets and the credit environment in Switzerland. Credit Suisse saw its shares tumble last week after its largest investor, the Saudi National Bank, declined to provide additional funding. Meanwhile, banking stocks are expected to fall today for yet another session as investors are pulling back from positions in First Republic amid concerns over the state of the banking sector. Now, let's stay with Switzerland. Let's take a closer look at what's been happening to Credit Suisse, because its reputation started to go downhill in 2021 when risky bets on British and American fund managers backfired. And that was after one of its star bankers was found guilty of pocketing $100 million. Also that year, Credit Suisse paid a $500 million fine from US authorities for defrauding investors. Reputational damage increased in 2022 with the publication of leaks by organized crime and corruption reporting project showing Credit Suisse catered to some of the world's worst abusers of human rights. The bank was also rocked by a series of corruption scandals, including money laundering for Bulgarian cocaine dealers. And after years of mounting convictions and allegations, an internal review carried out by Credit Suisse at the end of 2022 found material weaknesses in its account practices. By March 2023, the crisis of confidence reached its climax, as we know, with the disintegration of the institution itself. And now, to understand a little bit more about this, let's go to Han Tan, who is Xinity Group Chief Market Analyst in Abu Dhabi. And many thanks for being with us today. So a very difficult day for the banking sector as a whole. What can we say about the credibility and reputation of the Swiss banking sector at this point? And also, how will all of this affect UBS's credibility ultimately as well?
So to be clear, look, as you rightly pointed out, the troubles at Credit Suisse had been evident for years, right? Now, I think on a more positive note, the swift reaction by the SNB, that's the Swiss National Bank, in at least brokering this deal, shows the willingness of policymakers to really jump in and stem the fallout. Although it must be said that the contagion fears are still evident in the markets that are open this morning. As for UBS, what we know is that they might have to take an initial loss of about 5 billion francs if the assets, the value of the assets are lower than expected. But I think ultimately this could prove to be a win for UBS, which takes over the profitable Swiss Universal Bank under Credit Suisse Group.
Right, and Han, is this a harbinger of doom of some sort for the European banking sector? At this point, the question seems to be, who's next?
Yeah, indeed, and I believe that the last time on my on your program, on my last appearance on your program, I had mentioned those very same words, although it was more specific to the crypto sector. But clearly, it's affected the traditional banking sector right now, and as we are seeing in the reaction in Asian banking stocks, and also the fallout, the ongoing fallout from SVB now affecting First Republic. I think that's the multi-billion, if not trillion-dollar question, right? Are we seeing the green shoots of another GFC redux, so to speak? We certainly couldn't have predicted it coming into this year, but that's certainly front and center on every investor's mind as we speak.
You're right, and the other million-dollar question is, what will the Fed do this week, later in the week, and what would happen if the Fed were yet again to hike the interest rates?
Yeah, and that's a very pertinent point as well. Look, we know these interest rate hikes were intended to break something, and initially, conventional wisdom was that something was the economy, not the banking sector. But instead, that's been playing out, and we have seen the Fed, in fact, just over the weekend also issue more dollar swap agreements. In other words, it is doing more than intended to shore up the global banking or the US banking system. It suggests that there is a pivot afoot towards a more supportive policy stance rather than a restrictive one. So net, we expect a coin toss for the Fed to even hike by 25 basis points this week for fear of perhaps incurring more damage on an already fragile banking system in the US.
Wow, we'll keep a close eye on all that. Thank you very much for this comprehensive analysis, Han Tan.
Thanks for having me.
And that is all from Business for now.